Hi grade 11 student. So in this video we are going to do a full question paper of paper 1. So you have to make sure that you watch until the end, guys, so that this is going to help you, because some of this question they're just going to change in numbers. Okay, so this is part 2 that I uploaded on my other new channel, as you can see, which also, guys, please, I beg you, let's subscribe also to this channel, because other videos I will upload it on this video. Okay, both of them, they're going to help you. Part 1, this one, and the other one that I uploaded under Accounting Solution SA. Okay, now, guys, let's talk about the structure or the scope of paper 1. So paper 1 is going to contain topics like a fix the assets. Even though fix the assets is also form part of paper 2, you have to know it for paper 1 as well. Internals control, where you have to know the GAAP principle, concept, and the statement of comprehensive income, which is income statement. Okay, you have to know the balance sheet, and you have to know the financial indicator. Okay, you can see on even on the other question paper they said accounting equation, fix the asset note, income statement, current account notes, equity and liability section for balance sheet, and the last one was a ratio analysis. So the scope remain the same. Okay, so the question paper is going to be out of 150 marks. Okay, so this is what you are expected to know for your paper 1. All right, so I want to start with this question, guys, because most of the students used to ignore it, and it's very wrong, because this question is very simple. So the question is analysis and interpretation, which is financial indicators. Guys, even if it's a theory question, it's simple on this chapter. Let's write it, don't ignore it, né? Okay, let's quickly start with our question. So in this question paper, it was question 4. Okay, the following information was extracted from the accounting record of Miller Traders, a partnership between Mills and Langa. Their financial year end on the last day of February each year. 4.1. Calculate the following financial indicator for the year ended 29 February 2024. 4.1.1. We have to calculate operating expense on turnover. 4.1.2 AC test ratio, and the return on average equity by partners. Okay, that's what we are going to calculate. Then after that, we're gonna go to theory part. All right, now let's go to information. 4.1.1. Okay, let's go to information and calculate operating expense on turnover. Remember the formula on this one is said operating expense divided by sales multiplied by 100. So let's look at our operating expense amount. Operating expense for 2024, it was 585,000, which we have to simply divide by our sales amount. It was 3,459,000, and we multiply by 100. Okay, so this is going to give you an amount of let me calculate. Okay, yeah, it's gonna be 585,000 divided by 3,459,000, and we multiply by 100. It's going to give us 16.9%. Okay, 4.1.2, they want us to calculate acid test ratio. Okay, under acid test ratio, guys, they wanted us to do this formula, which we all know that acid test ratio is more like we are calculating if we will be able to pay short-term debt without what? Without inventory. It's a current assets, but we have to subtract what? Inventory. Okay, is to current liability. Let's take our current asset was how much? Our current assets, it was containing inventory, trade and other receivable, cash and cash equivalent. Okay, there are those three items. Because here we have to subtract inventory, which means that we just simply have to add those two without inventory. We are going to add 2, 2, 3, 100 plus 100,000, which of course is going to give us 3, 2, 3, 100 is to current liability of how much? Current liability is 359,000. Okay, this side is always 1, and this side we just have to say this one divided by this one, and it's gonna give us 323 100 divided by 359. It's gonna give us 0.9. Okay, then the next one, they wanted us to calculate return on average equity earned by partners. Okay, remember guys, they said by partners, so you have to take note of that. If they said by partners, it's not the same as when they are referring to individual, né? Like when they mention that it's for Langa only. So this one is for partners, for both of them. Okay, the formula here, it says net profit for the year divided by average equity 629,025. Okay, let's see, our average equity is how much? The average equity include capital account as well as current account. You add capital and current. If you add for this year, if you add the current account and the capital account of 2.5 million and 50,000 and 120, it's going to give you 2,670,000 plus for the last year you have to add 1,830 and 140, which is going to give you 1,970,000. Because this is average, you have to add them together and divide by 2. Let's add and see how much are we going to get. 2,670 plus 1,970,000 and we divide by 2. We are going to get 2,320,000. Okay, now let's calculate this one divided by this multiplied by 100. 629,025 divided by 2,320,000 multiplied by 100. It's gonna give us 27.1%. Okay, now we have calculated that. 4.2, it says that explain whether the business is managing its operating activity efficiently and quote 2 financial indicators. We have to check, is it business managing their operating activity properly? Okay, let's check on the result. Operating profit on sales, it was 19. Let's quote 0.2. Operating profit on sales increase from 19.5% to 22.2%. This is good, guys. It's indicating that the sales is increasing. So this is good. They're managing it well. But let's take the other one. Gross profit on cost of sales. We can't comment on that one because it remained consistently. It remained the same. It was 60% and it goes to 60%. That one is a markup. Okay. Now, sometimes to increase a markup, guys, it can be dangerous because some people, if you increase the price, they might end up not buying your product anymore. Okay. How about operating expenses on sales? Let's check operating expense. They were 18%. From 18% to 16.9%, the one that we got here. Yes, expense must decrease so that we can get more profit. So this was managed very well. So this business, in conclusion, is managing their operating activity efficiently. 4 marks for that. 2 marks here and 2 marks here. Very simple, guys. Okay, the next one. The question said, explain how the business can improve their sales in future. Quote one financial indicator. How can the business improve their sales in future? Okay, number one, we have to check gross profit on cost of sales, which is markup. That's where they can improve what? Their sales. They can decide maybe to increase the markup by only 2% because here it was remaining the same of 60%. But when they decided to increase the markup, they need to be careful. They can't just increase it by many percentages. Some people, they are not going to buy this product anymore. So the strategy is to do what? Is to increase by at least 5% or any reasonable percentage depending on the market related price. Because guys, if others are selling the same product with you by 10 rand and when you are selling it by 30 rand, they will go that side where it's 10 rand. So you can't just increase for unreasonable price. Okay. 4.3, the partners decided to increase their business activity in 2024 and agreed to take up a loan. Explain how their decision affected the financial risk of the business and quote one financial indicator. How business was affected by taking up a loan. Okay, let's quote. We have to quote. The related ratio, guys, is debt equity ratio. Okay, because if you check debt equity ratio, it was 0.3 and it has increased to 0.7. Guys, this is increasing the risk of the business. Why? Because once it's 1:1, it simply means that now the business is starting to face more problem. Because the more you have more debt, the more you have a debt, the more you are likely to lose your what? Your assets. Because if you fail to pay, they're going to take everything. Okay. You can't, guys, if you're in 5,000, you can't buy Mercedes-Benz, guys. That is costing 20,000 per month. How are you going to buy it? How are you going to afford it? You can't afford that installment. You have to take what you afford. So the risk is becoming higher in this situation. Okay. The next one, provide two suggestions that the partner can consider instead of increasing the loan. Okay, we have to give a tip. How can they make sure that they can have a fund without raising a loan? Number one, they can decide to increase their capital. If they have fund, they can just increase the capital on their own. Okay, they can also add more partners. Yes, if you are struggling, if you are two in a business and you are struggling with fund, just find another partner to raise capital. Ne? It can help rather than to do it, to borrow a loan. Okay, but the more partners, the more you have to share a profit. It's another problem. Okay, 4.4. Should the partner be satisfied with the return on their investment? Are they going to be happy, these partners? Remember, we calculated 27.1. But let's check. How much was it last year? It was 22. From 22% to 27, they are going to be happy, guys, because it has increased. It has increased. And beside that, interest is 8.5. They are getting more than interest. So this is perfect. They are going to be happy. Okay. Then the other one, comment on the liquidity position of the business for 2024 and to code to two financial indicator. Okay. Liquidity, we're talking about current ratio, acid test ratio, and the data's collection period or stock turnover. But let's check. Our current ratio has declined. It was 2. Now it goes to 1.8. So this is not good. This is not good, because if it keep goes like this, business will end up not affording to do it, to pay the debt. But otherwise, so far, it's still safe. But now let's check acid test ratio 0.8 to 0.9. We calculated. Yes, this one has improved, which is indicating that without inventory, business are likely to be able to pay. But there is still problem because it must be 1:1. There is still some problem that is showing that the business cannot be able to afford to pay all the debt without what? Without inventory. Okay. Then the other one, guys, data's collection period. It was 32 days. We used to collect within 32 days to our data, but now we collect after 56 days. Hi guys, imagine you have to wait for 2 months to collect the cash that you have borrowed people. Hi guys, 2 months is a lot. It's a lot. A lot can happen in between. So we can't wait for a normal days. Is only 1 month that we can wait for. Okay. So this question, guys, was containing 35 marks. It was containing 35 marks. So this is simple, guys. You have to get it. I think the last one, it was a under liquidity position where we have to comment. The stock turnover rate, we can also comment. It has decreased from 80 times to 5.2. This showing that the more we have a stock turnover rate, it simply means that we were stocking too many times. But if the number is very low, we were not stocking this, which means that the stock that we used to have, it was staying in a business for a very long time, which is not good. Okay, I hope you learned something on this part that I decided to start with. Guys, please remember that our extra class are going to continue. We are not going to rest. June, July, August, we are going to learn in advance. So come and join, guys, and learn with others. We are building foundation. We have a student that started with us since January. We are building a very strong foundation so that you guys, when you go to grade 12, during December, we're also not going to rest. For those who are in grade 11, going to grade 12, we will be pushing because, guys, we want you guys to get a distinction, study the course that you want, and have a good life. You know? That's what we want. So come and join. It's only 100 Rand per month. You attend twice every week. Okay, now let's go to the next question. So basically here we have 2 questions, guys. The first one, it is going to talk about a balance sheet, and the second one is capital notes and current account notes. Okay, let's start with the balance sheet one. It was 3.2 required. Prepare the equity and liability section of the balance sheet as at 28 February 2021 and show all calculations relating to the notes in the bracket. 18 marks. They want us to fill this small balance sheet. Asset section was not required. Okay. They give us information. Capital for both partner is a franc and the stain, and the current account, tangible assets, fixed, the loan, trading stock, debtors control, creditors control, SARS, bank, petty cash, cash flow, provision for bad debts, pension fund, and income received in advance. Okay. Now let's start, guys. We also have two adjustments that we have to read. Adjustment number 1, on 28 February 2021, Mrs. Stein contributed equipment to the value of 15,000 and cash of 15,000 to equalize her capital contribution. In other words, guys, he contributed a 30,000 capital. Why? Because whatever that you contribute as a purpose of starting a business is called a capital, whether it's equipment, it's a vehicle, or it's a land, it's a capital. So 15 plus 15, 30,000. Number 2, the partners have agreed to pay off 20,000 of the loan by 30 April 2021. Okay, now let's check. What do we start? We have to start by capital because that's the first one. Very simple, guys. We just have to take capital for both partner and we combine them. 200,000 plus 170,000, and remember there is an addition of capital of 30,000 under information number 1. 15,000 plus 15,000 is gonna give you 30,000, and you add. Okay, and after that you can add them together, they will give you 400,000. Moving to the next one, current account, guys. Credit balance. Remember when we talk about equity, guys, increase on the credit and decrease this side, which means that whatever that is on the debit is negative. Okay, let's start by the credit one of 10,360 of Spain current account. 10,360, and because the one for franc is negative, we have to do what? To subtract. How much are we going to subtract? 1,690, because it's indicated that it's debit. In other words, it's negative. Okay, so we don't have any other transaction. We can close it off, and amount, it will give us 8,670, and if you add them together, they will give you 8,670. Very simple. Okay, this is a partner's equity total, not equity and liability. Ne? Okay, now let's move to the loan. Under a loan, at the beginning of the year, the amount was 40,000. They never tell us about anything about the interest or any outstanding interest, so we don't do anything. But they say that the partners have agreed to pay 20,000 by 30 April 2021. That simply means that a loan is going to be reduced by 20,000, but this 20,000 is not yet paid. It's still a current portion. It's gonna be paid within 12 months, which means that we have to record it under current portion of a loan, 20,000. So which means that here we're going to left with 20,000, and our total non-current is gonna be 20,000. Okay, so the next one, if you check, our bank was indicated that it is credit. If it's credit, it's indicating that the amount, guys, is negative, in other words. So what do we do if the amount is negative? It's very simple. We have to do what? We have to record it as a bank overdraft, okay, because it is negative. All right. Okay. Now let's record that amount as bank overdraft. We're gonna say 20,250. However, guys, you must remember that Mrs. Stein put 15,000 to the business in the business account, not to 30,000, 15,000 on number one as a cash. That cash, obvious, the bank is going to take it minus 15,000. It's going to take it first before it go to the bank, because we owe bank overdraft, we owe bank, okay, and it's gonna give us 5,250. Okay, trade and other payables. That's where we are going to open a bracket and start with creditors control of 9,070, and we add it with SARS PSUN 3,500. Okay, and we also have to add pension fund of 500, and we also have to add income received in advance, because they all fall under what? Trade in other payables. Okay, so if you calculate the total, you are going to get amount of 13,770. Very simple. Imagine, guys, the balance sheet was simple like this. Okay, all those other items like a petty cash, cash flow, debtors control, trading stock, guys, fixed deposit, tangible assets, they are not part of this balance sheet because they are assets. Okay, so I think here we can get a total. All right, let's add totals. Firstly, you have to get a total of current liability. Let me calculate, because I didn't calculate on my notes. 13,770 plus 5,250 plus 20,000 is gonna give you 39,020. Okay, 39,020. Add it with 20,000 and you add it with 408,670. It's gonna give you total equity and liability of 467,690. Simple as that. That's how most of the balance sheet in grade 11 is gonna look like. Very simple. Okay, now we are moving to the next question, guys. The next question, we are going to talk about the two notes, a capital note and current account notes. So don't be surprised, guys. This is another channel that will be uploading some videos. So I want to split the papers. Paper 1, you're going to get it mostly in this channel, and paper 2, you're gonna get it under Accounting Solution SA. So make sure that you also subscribe on this channel so that you are not going to have a problem. You're just gonna find paper 1 this side and paper 2 the other side. And reminder, guys, during June, when others are in holidays, we will be attending our online extra classes. They will be continuing as usual. Only 100 rand. If you have never joined, guys, come and join during June. We will be starting June, July. We will be starting our term 3 so that when you come back for term 3, guys, you will be dancing. That cost to accounting, you will master in and out, because once you reopen during July, guys, August you're going to start with your a test. November is approaching as well, and December we are not going to close. December, for those who are going to grade 12, we will be busy doing our classes. So come and join now in time and learn many different papers with others. Okay, now let's go to 3.3. Okay, we were required to prepare a capital note. Okay, under capital notes, we are going to find two partners. Let's make it not long. Okay, we're gonna have a balance at the beginning and additional capital, and the withdrawal capital and balance at the end. Guys, never include withdrawal, a normal withdrawal of stock. We only include what? Capital withdrawal. Okay, it's gonna look like this. Remember, this is another question. It's not the same as what we were doing on the previous one. Then current account notes. Will look like this. Two partners. Okay, let me see if this is visible. Okay, it is. It is visible. Okay. We're gonna have a partner salary, interest on capital, bonuses, primary distribution, the final distribution, net profit. Okay, let's try to divide them a bit. And drawings, retained income, and balance at the beginning, and we have a balance at the end. Okay, then our notes will look like this. Okay, let's quickly try to do it. Okay, they say they prepare the following notes that will appear in the balance sheet: capital notes and current account notes. Okay, number A, we have capital amount for both Marvel and Lane, current account and drawings. B, Marvel took a stock to the value of 35,000 and this was donated to local charity. Okay, we can make donation for Marvel. Let's put Marvel here, Mr. Marvel and Miss Lane. Okay, drawings for Marvel. Marvel Initially he withdraw at the beginning, he withdrew 25,000, which we have to add 35,000 that he withdrew during the year, which was not recorded, which is going to give us 60,000. And Mrs. Lane never withdraw anything again. It's only 30,000 at the beginning. Okay, we started with this one because it was the first transaction. On 1 December, Mr. Marvel increased his capital by 75,000. Okay, additional. Mr. Marvel make additional. Mrs. Lane, guys, don't just write them in order. You can just write them according to the transaction that you are facing. He added 175,000 during the year. Okay, and they say that this was not recorded, which means that a 360 for Marvel, it was balanced at the beginning. This 360 was the balance at the beginning because it was not recorded. If it was recorded, guys, that's where you were going to do what? To first subtract this 175,000 from this amount and you get balance at the beginning. But it was not given. Okay. Then for Mrs. Lane, he never do any changes during the year. She never do any changes. It was 760,000 and no addition, no withdrawal, and at the end it was the same. So for this one, at the year end, it was 535,000. These notes contain only 3 marks, so there was no lot about it. Okay. The partners agreed to stipulate the following. Partners are entitled the interest of 15% per year. Let's calculate the interest. We can start with Mrs. Lane because Lane is cheap. It's simple. It's 760,000. No changes. Multiplied by 15%. And it's gonna give you the interest of 114,000. 114,000. But for Marvel, we have before and after. Okay, before, let's calculate before. It was 360 multiplied by 15%, and after it's 535,000 multiplied by 15%. We need to count 2 months now. After, it was from December 1 December to 28 February 2021. It was 3 months. 3 over 12, which means that before is going to be 9. How did I get 9? 12 minus 3 is going to give you 9. So you get answer here and you get answer here. When you combine both those answers, where is it? It's 40,500 and the other one is 20,063. It doesn't matter how you can round it off, it's fine. Okay, then it's gonna give you 60,563. That's how you deal with this interest. Okay, moving to the next one. On 1 January 2020, Marvel received 10% increase on his monthly salary of 26,500. No further increase were given. Guys, this increase was made last year, which means that the whole of this year it has increased because 1 January 2020, our year started 1 March 2020, which means that it's previous year, it's not current year. Okay, let's calculate the increase. 26,500 multiplied by 110 over 100. After that, you multiply by 12. Then you are going to get amount of 349,800. Okay, And for Mrs. Lane, they say Mrs. Lane's salary for the year is 425. Remember, guys, here we record annually. If you get monthly, you have to multiply by 12 so that you can get annually. Okay? For Mrs. Lane is 425,000. Very simple. The next one. At the end of financial year, Mrs. Lane received a bonus equal to 12% of her annual salary. 12% of 425. 425 multiplied by 12%. You are going to get the bonus of Mrs. Lane of 51,000. Okay, 51,000. Very simple. 425 multiplied by 12%, you're going to get 425. Okay. At the end of financial year, Mrs. Lane received a bonus equal to, okay, we already read this one. Mr. Marvel and Mrs. Marvel share remaining profit or loss in the ratio of 3:2. And Mrs. Lane's portion of final distribution amounted to 125. Okay, final distribution for Mrs. Lane, it is already given. It's 125. Okay, they want us to calculate this one using the ratio. Okay, but here I think let's first get primary distribution. We just have to add everything. Well, this plus this plus this is gonna give us 590. 590,000. I think, but there is a bonus for Marvel. The last one, Marvel received bonus of 12,000 at the end of financial year. 12,000. You have to add these three, and it's gonna give you amount of 422. 363. Now we are looking for this one. Remember, they say that the ratio is 3:2, which means that we know that Lane is going to get 2, and what they give us is 2. 125,000. What we want is 3 for Marvel. What we have is 2 for Lane. Divide by 2. Then it's gonna give you an amount of 187,500. Very simple, guys. Very simple. Okay. Now let's proceed. Because we already have this, it's simple to proceed. Okay. Now we have to get a net profit for the year. You just added these two, you add these two. This side is gonna give you 609,863. This side you're gonna get 715,000. Okay, return income, guys. You just take this minus this minus this, and you're gonna get 549,863. 685,000. Okay, balance at the beginning, they are given. Okay, and they said for Marvel is debit, and you know that debit under equity is a minus, so which means that it's negative. Balance at the beginning is negative 2,300. Okay, for this one it's a credit, which means that it's positive 4,500. Balance at the end, you just take this minus this plus this, then you will get the answers. Okay, it's 547, 563, 689, 500. All right, that's how you deal with these notes, guys. There is a lot of calculation, because hey, I can even feel my hand now. It's a bit tired because there was there was a lot of calculation more than a theory. So make sure, guys, read it twice each and every time. Make sure that the calculator, you reset it before you start calculating, because guys, some learners, they do a terrible mistake, and because of calculator they end up getting wrong figures. So guys, let's make sure that we reset our calculator and make sure that everything is fine before we start.
I'm going to start from the scratch. So I picked the question paper that we are first going to do our GAAP principle, because guys, remember, when you prepare income statement and a balance sheet, you have to follow the rules so that it's gonna be simple for you when you are preparing your income statement. Some of you call it statement of profit or loss. It's still fine, okay? Let's quickly check our question so that we can apply those principles when we prepare our income statement. Okay, so it was containing 50 marks. Okay, choose one word from each of the following statement by choosing the GAAP principle. The reason why we're starting with the GAAP principle, guys, remember I said when you prepare income statement you have to follow a GAAP principle. Okay, there are some GAAP principles that I want to introduce to you so that it's gonna be easy. All right, we are given number one, going concern, a prudence, historical cost, materiality, business entity, and the matching concept. Okay, 1.1.1, they say that the business expect to make a profit of 80,000, okay, on the sales part of the building, and it will not be entered in the books until the transfer of the land has been concluded. In other words, there is no transaction that is going to be recorded until what? Until the transaction has been made. In other words, for now there is no any sales that has been conducted. So the principle that apply in this case, guys, is called a prudence. Okay, then the next one, insurance of 2,300 is paid in advance. This one is very, very, very important. Okay, insurance of 2,300 is paid in advance, and this amount is not reflected in the statement of comprehensive income. Okay, you know that when we prepare income statement, guys, the principle said that we must only record, or we must only focus on the transaction of this year. In other words, if there is something that has been paid for next year, don't include it. You must subtract it. Okay, so in other words, guys, this principle is saying that if you record for 11 months, this is not allowed. You must add another one to make it 12. Why? Because this other one, you can't record it on the next year. The principle will never allow you. Every transaction must be for 12 months, whether it has been paid or not. It must be for 12 months, all income and expenses. Okay, so now what will be the answer for this one? Of course, it's a matching principle. Matching principle, guys, is the most important one, because all income that we are going to record here and all expenses, you must apply this principle. Okay, the next one, the business will continue to operate in the future. Of course, this one is a going concern. Okay, in other words, we're assuming that because we make a profit this year, obvious, even next year we're still going to do what? To operate. Interest expense should be disclosed separately in the financial statement. Okay, this one is a materiality. When we say materiality, it's more like we are saying that this is very important. We must see it in a separate way. We don't want to see it included with other item, because it will look like it has been hidden. So it must be separate so that we can see it. All right, that's what this principle is saying. So now the question that we are going to do: prepare the income statement, which is statement of comprehensive income of class of traders for the year ending 29 February 2024. Okay, and is containing 42 marks. Okay, then after that they ask us some theory question, which says provide 2 possible reasons why the rent income decrease. Of course, if there is no demand, the rent will decrease, or maybe the condition is no longer the same. Okay, however, now we have to start with our income statement. Okay, we have been given the extract from the pre-adjustment trial balance on 29 February 2024, which means that our year is ending 28 February 2024. In other words, our year started last year in 2023 on 1 March, because it must be 12 months until this. It must be 12 months from 1 March 2023. If you count it until 28 February 2024, it's 1 month. Okay, we have been given equipment, accumulated depreciation, loan, trading stock, and so on and so on. Remember, the part that we focus on when we prepare income statement, most part that we take the balances is from nominal account section. Okay, if you check the sales amount it is given, let's quickly start. We have to start by opening a bracket. Why? Because remember, from sales that you have made, it can happen that some customer says return the goods, so you must subtract what has been returned. If there is something that is not recorded, you must also add it. If we sell but we didn't record, you must add it. Okay, let's start with this amount of 1,248 and 260. Then we subtract. Debtors allowance simply means that the customer has returned the goods. We must subtract it because we can't count it as a sales while it was returned. Okay, now we have to check at least the transaction number 1. Goods with the cost price of 9,200 were sold on credit to P. Smith. No entry has been made. So we have sold the goods, but this good was not recorded. Okay, what do we do now? Because we sell, we can subtract. It's going to increase our sales. But guys, here the problem is that they give us only 9,200 of cost price. We don't record cost price here. Cost price is like cost of sales. We must convert this 9,200 into what? Into selling price. Remember, on top at the beginning, they give us a markup. They said the following information was taken from the books of Lazo Traders on 29 February 2024, and the business used a markup of 80%. We have to convert this into our sales because this is a cost of sales. We have to say 180 on top. Remember, it's always 100. You just added the markup that you are given. If they give you 50, it's going to be 150. Then you see multiply by 100, and it's going to give you the amount that you are going to add of 16,560. Okay, so we don't have any other transaction related to this, and now it's going to give us 1,261,620. all right, remember guys, if you check here under cost of sales, there is nothing that was given. If there is nothing that was given under cost of sales, this simply means that you must use a markup. You are going to take this total to convert into cost of sales, 1,261,620. Now, because you're converting to cost of sales, you must say 100 on top and 180 on the bottom. You do reverse of what you did here. Okay, then it's gonna give you 700 and 900. All right, remember guys, the one of adjustment, because it's already included here from this amount, you must not reaccount it again. You're gonna double amount. Don't do that. Okay, then now to get a gross profit, sales minus cost of sales, we're gonna get a gross profit of 560 and 720. Okay, that's how we do the first part, which was containing almost 80 marks. That's a lot. Okay, the next one, we're gonna do according to the transaction, guys, because we can't go to this part and this part. It's gonna be difficult to edit. Okay, so Roman figure number 2. On 29 February 2024, the fiscal stock count revealed the following. We have a trading stock of 196 and 450, and we also have a packing material used of 7,900. What do we do? This trading stock, guys, if you compare it with the one at the beginning, you will find that the value of closing is lower, because at the beginning it was 212. This is indicating a deficit because it's more like the value has been lost. The stock has lost a value. So in other words, it's a deficit because the value, if the value of stock goes down, it's indicating deficit. Deficit is an expense. Okay, we're gonna say our opening 196. Opening is not 196, guys. Closing opening is 12,000 minus closing of 196, 450. You must also remember to subtract the stock which was sold using the cost price from the Roman figure number 1. It was 9,200. Why are we subtracting? Because we no longer have this stock. It was sold to customer. We no longer have it. That's why we're subtracting. If the customer return it and it was not recorded, you add back because we receive our stock back. Okay. Then our trading stock deficit will be 6,350. Okay. And now, again, remember we are also given packing material used of 7,900. Okay. So what do we do with this 7,900? Number 1, remember if you are given packing material at the beginning and purchase and on hand, you just said opening plus purchase minus closing, then you're gonna get the one that you record under operating expenses. The one that you record under operating expenses is called packing material used. Okay, so which means that the one that has been used is the final amount here, and that's what it is given. In other words, we're not going to calculate anything. The one that is given is the one that we have to record. Packing material used. It's not on hand. You must be careful about the difference between the two. 7,900. Okay. And the next one. A debtor, T. Naidu, whose account was previously written off, paid 800. Okay, and the bookkeeper incorrectly credited the amount to a bad debts account. So here, what do we do now? A debtor, Naidu, whose account was previously written off, paid 800, and the bookkeeper incorrectly credits the amount to a bad debts account. Okay, guys, here we have a little problem. There was error that happened that we need to solve. Instead of recording this amount as a bad debt, it was recorded as a what? The debtor Naidu, whose account was previously written off. The person was actually written off already and has paid 800. When a client paid 800 but was already written off, we call it bad debt recovered. Bad debt recovered, 800. But this amount, guys, yes, we record it as 800 here. It's fine, and we did the correct thing now. But this amount was incorrectly credited on the bad debt. In other words, it was subtracted under bad debts. They recorded it on the credit. Remember, expense It's a plus minus. It was credited. Okay, so in other words, now when we can tell what was credited, when we can tell, we debit. So in other words, we have to go to bad debts and add this amount which was subtracted. Okay, so at the beginning, our bad debts amount was 8,800. Now we have to add back 800 which was incorrectly recorded. Then it's gonna give us 9,600. That's how you correct this one. You don't subtract. You must first check if they did mistake by credit or debit. Okay. The next one. Provision for bad debts must be decreased by 500. It must be decreased by 500. So here we have a provision for bad debt of 5,000. They say that this amount must be decreased by 5,000. They didn't give us percentage. Remember, if they give us percentage, we have to perform some working, which we have to say a debtors control minus bad debts from transaction, and we multiply by 2%, and we compare with the one at the beginning of the year. But here, guys, they give us a final amount. Because amount has decreased, it must be a profit. If people that we are doubting that they are not going to pay us, if they become few, which means that it's a good thing to us, which is other income. But if it has increased, if people that we are doubting that they're not going to pay us, they're becoming more, it's an expense. You have to record it as an expense. This one is it has decreased, it will go this side. 5,000 provision for bad debt adjustment. Okay, then there was no need to work on this one as it was clearly given. Okay, moving to the next one, Roman figure number 5. One employee is omitted in salaries journal for February 2024. Okay, and gross salary, deduction, net salary, UIF, and contribution. Okay, then UIF contribution include the contribution made by employers or contribution form part of salaries and wages. In other words, after we have done with the calculation of the salary, we must also add what? Contribution in the same amount of salaries and wages. Okay, at the beginning, salaries and wages, it was 189,240. Remember, we must add the one which was omitted. The question is, which one to add? Obviously, guys, we add a gross salary, which is not given here. But it's easy because they give us that deduction was 560, which is 7% of the gross. Okay, we must do a reversal method to calculate this one. 560 multiplied by, we are looking for original amount and we have 7%. If you do this calculation, guys, you are going to get amount of 8,000. That's the amount of gross. If you say 8,000 multiplied by 7%, it will give you 560. Very simple. Okay, then again, remember, we also have to add contribution. Contribution, it was given, there was no need for us to do what? To do any calculation. So which means that we just gonna say plus 160. You don't do 2% of 160. They're just indicating to you that the 2% is a what? Is amount that they calculate. They use 2%. Even if you use 160, guys, to do the reversal method, 160 multiplied by 100 over 2, it's still gonna give you the 8,000. That's what those percentage is showing. It's either you can choose to calculate it using deduction or contribution. You're gonna get the same amount. Okay, you choose the one that you want. Okay, then because we are done here, we must calculate the total. What is the total for salaries and wages? 197,400. Okay. Next one. The next one, insurance include an annual policy of 5,700, 57,840 taken out on 1 June 2023. Let's first check. Insurance, it was 42,000 before anything else. 42,840. Okay, and here they say that annual policy of 57,000. Annual is means that it's 12 months. Okay, they say it was taken out on 1 June 2023. Okay, now here we have a problem. Remember, our year is ending February 2024, but if you count from June up to 12 months, you will find that this will end next year May. Okay, if we allow this, it's going to be against the principle that we did at the beginning of matching concept, because matching concept, it says that you must record until this day. If it's ending next year May, it will have March, April, May. These 3 months is out of our reporting period. We must remove them. We have a 3 months that need to be removed. We must say 57,840 multiplied by March, April, May. That need to be removed, which is going to give us how much? Let's calculate. It's going to give us the amount that we must subtract of 14,160. Okay, when you subtract, it's going to give you 28,650. Very simple. That's how you perform this one. All right, I hope you are learning up to so far, guys. Please make sure that you subscribe to this new channel so that I'm gonna do part 2 for the income statement with the different transaction. The more we have many people who subscribe, the more we are going to do another part 2 and part 3. Okay, so do yourself a favor so that you can also benefit. Okay, moving to the next one. The loan statement received from the GAAP Bank reflects the closing balance of 630 and 800. Okay, so how are we going to deal with this one? The loan one is the one that is going to help us to calculate interest. At the beginning, guys, at the beginning, our loan was 611,300. We have to compare with the balance at the end and see how much was it. At the beginning, it was a little bit lower, and now it has increased to 680, which means that they charge us interest because we didn't pay 800. Okay, if you do that, you're going to get interest that has increased of 19,500. Okay, 19,500. It must have a bracket, guys. It must have a bracket to indicate that it's an expense. Okay, next one. The rent has been received for a period of 1 March 2023 to 31 December 2023. So in other words, they received the rent for only 10 months. If you count March, April, May, June, July, August, September, October, November, December, it's 10 months. Are we allowed to record 10 months under income statement? No, we have to record 12. In other words, we must add the shortage of 2 months. But they say that you have to take note. You have to take note that the rent has decreased by 400 per month from November. In other words, November and December, there is a decrease of rent. In other words, this is what we have to do. Because it's a decrease, it's not increase, we must add back decrease so that the rent amount will be on the same level, so that when we divide, we're gonna get a amount before rent decrease. Okay. The rent, it was 78,200. Okay, let's do calculation here. 78,200. We have to add, remember it's November and December. 400 plus 400 is 800. We must add back 800, which is going to give us 79,000. Divide by 10 months. It's gonna give you 7,900 per month. This 7,900 per month, guys, is before decrease. You must subtract what? 400, so that you can get 7,500. 7,500 is for 1 month. You must multiply it by 2 because we must add 2 months because they paid for 10 months. This 1 times 2 is gonna give you 15,000. That's how you work out this rent. Rent has a lot of challenges, guys. I'm gonna bring other examples on this channel, so you need to make sure that you do what? You also work out the different calculation and the different transactions so that you can practice this kind of challenges. I know the rent is mostly challenging because the other one, they will say that it has decreased or increased by percentage. You must use other formula, not this one. We're gonna do it on part 2. Okay. This one will give you 93,200. Okay, here we can get a total which is going to give us 99,000. Okay, gross profit plus other income will give you gross operating income, or gross income, I mean 659,720. Okay, and the operating expenses, we still have a telephone. Okay, sundry expense. Okay, and let me do this. Okay, this one must not supposed to be here. Sundry expense, it was given, guys, is this one. Telephone is this one, and packing material, we have it. Okay, we left with bank charges and interest. Okay, let me write this in a straight format. 86,700 and the 23,650. Okay, otherwise what was not calculated correctly, you have to recalculate on your own, guys. Don't tell us on the comment section, because video will never be repeated. Okay, because you can see there is a lot of calculation. I can't verify everything. You have to do it as a student. All right. Depreciation, I think we have it on our transaction, on our trial balance, I mean, is 85,600. It was given. There was no need to calculate anything. Bank charges. The bank statement reveals the following items that have not been recorded in the relevant cash journal. Transaction fee and EFT, you just add them together, they will give you bank charges. 340 plus 210. It is gonna give you it's gonna give you amount of how much? 550. Okay, if you add all expenses, you are likely to get this one, 446 130. If you don't get this one, just admit whatever that you get, as long as you are applying the principle correctly. All right. Then operating profit. This one minus this one, it will give you 213,590. Okay, guys, we don't have any other transaction now. But we can get this. Remember, the profit for the year was given, which means that we must get profit before interest expense as a balancing figure. If you take this one, when we go up, we change the sign. If you take this one plus this one, we're gonna get 229,590. Okay, and interest income is a difference between these two, which if you subtract these two, you have to subtract because this one is positive. Okay, when you go up or when you do reverse, guys, you change the sign. This one is a balancing figure. That's how you conduct income statement, guys. I hope you enjoy. At least you learn something that you didn't know. So we're going to bring part 2. So just make sure that you subscribe to this new channel that I just have created, so that those who are going to university level, this will be your channel. Also, if you are going to university level and you are going to do accounting related, that's where you're going to get your videos. Because on the other one, accounting solution SA, we just record the one for high school. So for this one, we're just gonna mix it, but it's going to explore more videos that are related to high institution like college and university. I'm gonna see you on the next one. Part 2 is coming.